an important cabinet meeting that's lined up early this morning at 9:30 a.m. where a lot of things could get discussed, and one of them could be the government possibly hiking the natural gas prices for ONGC, Reliance, etc. In fact, this could be giving marketing freedom in a calibrated way to a lot of the gas that is mined from difficult fields. Sudeep Anand, the analyst at IDBI Capital Market Services, joins us now on the phone line. Sudeep, first, what is your own expectation from the cabinet meet today? And if indeed, the pricing is done at an average cost of the alternative fuels, how much do you think the gas price could rise to?
Hello, good morning.
Yeah.
Our expectation is that gas prices at current level, which is around $4.2, is not financially feasible for the tough terrain. So there is a likelihood that the government may increase the gas price by around 60 to 70% for the gas coming out of the deep water or some tough terrain or shale gas assets. So that would be positive for the upstream, but that would be in the long term. So in near term, probably we don't see any major impact on the valuation, but yeah, definitely it would be a positive for upstream companies.
Okay. There was also some news that we were getting that the Ratna R series could be given to ONGC instead of SR. Will that be terribly negative for SR oil and terribly positive for ONGC if that happened?
I don't think that would be too negative for SR and too positive for ONGC, because the volume is not pretty high, so we don't see any major impact on the both the companies.
Okay. Well, we also get reports. Actually, I'm reading out to you a Citi report which says that by 2018 they are expecting a huge glut in gas. They say Australia and US are set to drive 100+ million tons per annum increase in LNG supply, and demand is expected to be only 70 million tons per annum at that time. Do you see gas prices falling further, the landed LNG price?
Our expectation is that LNG prices will come down in longer term, because if you see a lot of new LNG supply is coming from Australia and US. And at the same time, if Japan is again moving to nuclear capacity, then the demand from demand for LNG, spot LNG, will come down further. So that would keep more pressure on the LNG side, and we expect that the LNG prices will remain under pressure over the next 2 to 4 years.
So how will you translate it into stock picking? Will you pick Petronet, GSP?
India is an energy deficient country, and any fall in your gas prices would definitely be positive for India as such, and all the companies which are involved in your gas import side, like Petronet or GAIL or GSP, all the gas utility companies will be benefited of that.
Okay, so just to come back to that point you were making, in order to incentivize exploration, the government may increase the gas price by 70%. So that would mean more than $7 per barrel. How much of a positive, if you could quantify, for names like ONGC and for Reliance?
It all depends what kind of volume comes out of the exploration and development work. So it's very difficult to predict as of now.
But I'm not able to gel the two. Yeah. If the landed LNG is going to be so cheap, below $5, then what is the point in giving them $7 price? Who will buy the domestic gas?
I'm not talking about $5 per MMBtu of gas price in near future. So government have to give the benefit to all the upstream to keep motivated for the drilling work. Okay. So if they won't get a good price, probably the drilling will not be financially viable. So that would.
Okay, fair enough. What is the landed price now, and when do you expect $5?
Right now, your spot LNG is trading at around $6.7 to $7 per MMBtu. So landed price would be around $8.5 per MMBtu.
Okay. All right. Thanks so much for joining us and giving us those views. So